Welcome back to episode 3 of the WT3 podcast. This is the podcast where myself, Liam, and Thomas bring on guests who have infinitely more experience than us to tell us about bringing a business from 0 to 1. Today we have Ian Foley, who has an absolutely amazing career history, having started his career in consulting and finance, working in the San Francisco Consulting Group, Telco Italia Ventures, and MCC Global. Later working at Stanford Research Institute, where he helped build Siri, what is in Apple's now voice technology solution. After 6 years, he came to the conclusion that after focusing on helping others, he wanted to now focus on building companies himself, where he started his entrepreneurial journey as VP of Business Development at Rhythm, a mobile video brand advertising company that was later acquired by BlinkX. He then went on to become VP of Sales at Me, a provider of digital video brand advertising, which he took from 30 million to 170 million in revenue and IPO'd on the New York Stock Exchange in 2013. Then going on to founding Acute IQ and running that as the CEO, a customer acquisition platform that used machine learning to predict purchase intent. They received an award from SAP for the most innovative enterprise software. Acute IQ was also then acquired by Trajectory Solutions in December 2017. After his startup experiences, Ian created playbooks to help other entrepreneurs succeed and move forward towards private equity. As the venture partner of Xenon Ventures, where he worked with a portfolio of 30 companies on improving their valuation by helping them raise capital, undertake M&A, and building new business lines. Next, Ian went on to become the Chief Business Officer at Arweave, where he helped 250 companies get from Web 3 to Enterprise Web 2 and improve their operations. Ian then joined Binance as Chief Business Officer at BNB. CZ was interested in Ian applying the same playbooks of helping large ecosystems to support BNB's ecosystem of 4,000 apps. Currently, as if that wasn't enough, Ian is now the general partner of Infrastructure Ventures, where he is working on finding entrepreneurs in the Southern Hemisphere and giving them a better opportunity to build and raise capital than they would have if they had done it as an entity in their own home country. Ian is looking for the next generation of entrepreneurs in still untapped markets, believing that if we can crack the problem of providing the right opportunity to the best founders, they will have positive impact on hundreds of thousands of lives. Ian, thank you for being here with us today.
That's
to
very
talk
kind.
about how we look at the market landscape and finding opportunities.
Well, excited to be here with you guys.
I believe one of the first stories we would talk about is how you were talking to the producers of Family Guy. Tell us a little bit more about that.
Yeah, so this is when I was at Rhythm. Rhythm was the first mobile video ad network. So I suppose you could blame me for all those annoying ads you now see on my mobile phone. So beforehand, it was thought as too expensive to actually put video on mobile phones to give away for free by the ad model. And so there were companies out there who were doing it. You get to go and pay to go and get access to video to watch on your phone. This is before the iPhone, back in 2004, 2005. So anyway, we were first to market, and when the iPhone came out, we had created our own, at that point, our own video ad network with content, and we were creating apps. We actually created the first video app on the App Store when it launched, and we got to number 1. Wow. But there weren't that many app stores at the time, so it's easy to get to number 1. So VSnacked was called, launched. We got some great content, and I was responsible to keep on finding new content. So that means going after publishers, content providers, to get content to be able to watch the content and then see the ads. So it's kind of chicken and egg. You need the content, then to get the ads. And we were at that point we were building the whole thing. We were building the apps, we're creating the actual sourcing the content and sourcing advertising, the whole thing.
Wow,
a lot of work, but we needed to do that. It was a starting point of a new industry, so you needed to do the heavy lifting. And I remember this is why Family Guy was relevant. We were trying to sustain our lead in the App Store and finding it really hard. And thought, well, let's go and find new content. So we went around. I went to down to Hollywood, met the guys in the Fox studio, who at the time had a number of assets, including Family Guy. And I said, listen, what we should do is we should put Family Guy on V-Snacks. And there was some silence in the room for like, no way. But they said, well, what we are thinking of doing is creating our own app around Family Guy. We don't really want to license our content. And that was the aha moment. And why it's career defining, it's listening intently to customers, because this is what was key for us. As in that meeting, we listened to what the Fox team said and actually changed the whole business strategy of the company. So rather than go out and create our own branded experience of eSnacks, we then started powering up all the other tier 1, tier 2 content providers, their apps. It sounds obvious now, but at the time we felt there wasn't enough basically movement in the industry to do that. But the Family Guy instance, that really made me to realize there was an opportunity to do this. There was an opportunity to go and power up third-party apps. And it's really example of why it's important is it's realizing that listening to your customer, having them drive your strategy is far more important than you thinking what is right. And so that, amongst many other instances, is a key idea, because it gives the heart of what I believe in, which is that listening to the voice of the customer, even very early on, we're talking about from 0 to 1, this podcast is about. So very early on, if you can have your strong idea, have a hypothesis around what you want to build, but test it by talking to customers, test it like we did, but we did it a bit later, too late, in terms of talking to Family Guy. Ideally, we would have taught them earlier and got their opinion earlier, but we didn't. So advice to those who are building companies is listen to the customers early and often, because they can often be a great guide to help you build your business.
Amazing. In that sense, how were you listening to customers at that part of your journey?
Well, up until then, we thought we had to go and build the whole sort of stack ourselves. We had to go and find the content, find the advertising, build the actual app, go into the marketing, customer acquisition. So we felt that we had to do the whole thing. But by listening to customers, we realized we should just focus on what we were really good at, which was finding the advertising. They had the content, and their brand could find the audience. So focus on what they were good at.
Oh, awesome. So I've got a story here about another tree falling in the forest.
Yes. One thing I do is, as I suppose a side hustle, is I'm a cartoonist for Fortune magazine, and I got into that by actually originally I was a journalist at university in England, because in England actually as a journalist it was great because you get invited to all these really nice events. I got on went to Henley, I went to Wimbledon because I was a journalist. I got invited out, so it was great way to begin. But the tree falling in the forest is about 15 years in, as I was still writing on the side. I sort of moved from writing at university was more as a way just to understand industry. By the time I was in the industry, I was writing really just to keep up and build a brand, I suppose. But I began to realize increasingly that I was yet another tree falling in the forest, yet another person in technology in Silicon Valley writing about tech. Yawns. Like, so what? And I really felt that I even did analysis. Those tools you can look at, and they can tell you the heat map. I think it's the heat map of where people look on the page. And I'd find that people would read the first sentence, scroll down through my article, look at the maybe an image or something, and then read the last sentence. I thought, all this bloody work.
Yeah.
But basically, people are not appreciating it. So I thought, why don't I try a different medium? Let's adapt to the zeitgeist of today, which is really about thinking about sharing and engaging with others. So I thought that let's move into the world of cartoons. And because of my background in advertising, I thought, well, let's create a single panel cartoon. Probably a big mistake because it's far more harder to do a cartoon on a single panel than a multiple panel. But I came from that advertising space. Like, I'll create a 300 by 250 ad unit. That would be my cartoon. I can then send it around. I can send it to all over the internet. Although people may not want to see it, I could do so. So I ended up building this single panel cartoon concept. I basically was like the 1,000 words I put together now, as they say, a picture's worth 1,000 words. So the piece there is realizing, so the being a tree falling in the forest, it was a realization that, you need to constantly find ways to keep innovating, be competitive, differentiate yourself. And that was a hard change, but I realized it was a far more effective one. And because of that, I got into Fortune and other occasions, my cartoons, which I was not getting into watching my articles. So I suppose that is the upside there.
Yeah, I had a similar conversation with a mentor, which was you've got to make sure you're in the right boat, rowing the right direction.
Yeah.
And it's, you could be trying your hardest working in the financial sector, but compared to the amount of money you could make or the amount of progress you can make in say 2017, 2021 in the blockchain space, it doesn't matter how many years you work, the water's flowing the other way.
That's true. Well, my boat was sinking, to use your analogy. Well, actually, I was lost in the Pacific.
Lost at sea. In the sea of content. Okay, so third piece, really looking at discovering lost Einsteins, and something that we've talked about recently. But could you take our audience through a little bit about?
Yeah. So I suppose that having done a few startups myself, I've realized how hard it is for people who've got to actually access capital. So if you've got an idea and you're fortunate enough, I suppose, to be born in San Francisco or maybe London or Beijing, well, I think something like 62% of all capital is deployed. Well, you've got a pretty good chance that you actually have a chance to get capital to build your company if you want to go down that path of building a venture-backed startup. So opportunity is great if you're in those locations. Now, if you go beyond that, let's say across America, it's harder. In fact, actually, MIT did this research report. And I remember reading it. It's actually, I feel sometimes I read this report. You know how some people talk about they read, Satoshi's like white paper and then had that discovery moment. Well, I had my discovery moment when I was reading this MIT report, and it was called Lost Einstein. He was talking about like how even in rural and mid-sized American cities, there's millions, literally millions of Americans who have not been able to live on their true potential. And it got me thinking. I was like, well, maybe it's not just the Northern Hemisphere. Maybe the biggest opportunity is the Southern Hemisphere, which is even further removed. I mean, imagine you're like growing up in Sao Paulo, or you're in Nigeria or Indonesia. Now, how hard is it for those people to be able to actually get capital? And it was like, I suppose it was reading that report was a really important one to sort of bring to the forefront what I wanted to do next. And that was really the basis of what I'm doing now, which is infrastructure ventures.
So where you come from really, really matters as to whether or not you can get in the room.
Yeah.
And that's just a reality. It's not a good or a bad thing. It just is, regardless of how you feel about it. So yeah, it is a real problem. Last time I was in Jakarta, I was meeting the Chamber of Commerce for various different things, and they one of the problems they were trying to solve was how do we get money into the country to support these young burgeoning entrepreneurs. And we were looking at everything from the Association of Blockchain to essentially money lending. They call it it's a different translation words there, but basically short-term loans and that kind of stuff. And how they could start getting innovation into the technology they were building rather than buying it in from outside. It was actually quite an interesting couple of weeks. There's no way they can get funding unless you have someone who is of status sponsor you in, which is basically like getting a GP of a VC to know you, which is not easy.
Yeah.
It's fascinating because we always see, like when we're talking about lost Einsteins and Southern Hemisphere, like we see it in the other way around, because when building tech, we have a lot of entrepreneurs here in the north that are like, oh, we want to deploy our tech in the south, and then find it hard to find actually funding for that, even in the north. But what I always find so interesting is that it's people that are from Europe, right, that want to deploy, and maybe they've lived 10, 20 years in Africa, or in this case, Africa. I always find it interesting that we see less African entrepreneurs, and it's solely for this reason. It's like there's no capital. If you don't have capital, why would you build, right? And if you build, you won't build with PhDs from Europe. You probably build with your local team, right? I think this giving the Southern Hemisphere more access to capital, I think, is going to be a massive change in narrative, and I think a perspective over the next 10 years in tech and everything that drives it, right?
Exactly. And I mean, what's interesting is you look at just population growth. I mean, by 2050, I suppose I'm saying this in the question, obviously we have India, China, the US. What countries do you think are the next 3 or 4 behind them in population size?
Indonesia for certain, one of them.
Indonesia's one.
Nigeria, I believe.
Nigeria's other, yep.
Brazil? Argentina?
Yep.
No, Brazil.
And the final one is Pakistan. So, I mean, this is incredible. Just the sheer, I mean, and you've got to believe there are incredible companies are yet to be created. And this is why I think interestingly about blockchain fits in, is that there are some capabilities that blockchain provides, which I suppose democratizes tech to the extent that people in these other parts of the world can actually build a lot cheaper. I mean, this is the upside of these sort of frameworks that get created, whether it's a wallet or it's some basic building tools, which just give these tools in the hands of people. And you can do so much more nowadays with these tools. You don't need as many people, and you can actually more quicker get product to market and provide the same level of quality as you'd expect in building anywhere. This is what is incredible. It's a huge force of democratizing tech. That's what I see.
Do you think, and I would love to talk about, because I think these are very important points, and I think it's a more nice segue into like the advices for what you would give to these entrepreneurs. But I wanted to add one question here, which is, do you also believe that tech has more impact in these countries due to the fact that the problems that tech solves, if say blockchain or AI or anything else, is more impactful due to the fact that there's a different culture, different infrastructure for tech?
Yeah, I think so. I mean, it plays out already. This is played out about, it was 5, 10, 15 years ago with the rollout of mobile phones. There is far more value for a farmer in Kenya to have access to a phone so they can like book the price of his produce at the marketplace, as opposed to like arriving in the marketplace and having to take the price it was given at that time. So even this has been long proven as tech can help leapfrog and in these markets, because it's starting from a different stack. In fact, you can start from a completely afresh. So I think there's that piece which is long been applied. Mobile phones, the most recent one, but the other piece I think is just the access to finance. That's the one that I think is some of this whole concept about capital. But it's really hard for people to get access to a bank account. But with a wallet, a blockchain wallet, you could very easily move money around and transfer around. And let's say there's going to have to be regulation, and there's simpler ways to access a wallet. But the concept of the fungible nature of money and how it applies with using blockchain for that is really exciting. And I think there's huge opportunities across the whole global south. I'm seeing I know the folks over at Stellar, who have a number of their companies, their ecosystem, are building great technologies in Central and South America around remittances and things like that. And then likewise in Africa and in Asia. I know, for example, when I was some of the companies that we were supporting at BNB in the finances tech, many of them are gaming companies based in in Asia. They were creating these casual games, which were far more higher take-up rate than they had in sort of the global north. And it was really because they were dealing with the local situation. So you had the chance to develop really innovative casual games. And we see instead up here, we're waiting for the next Marvel masterpiece, or the next, it takes now basically years, if not months, to basically to build out the next version. It's a different pace. So I think there's both a technological leap, but also there's a lot of great services that can come out, whether it's it's finance or gaming or many other areas that the global southern or actually tend to lead and be a source of innovation.
Gaming has always been huge in APAC. Definitely casual gaming and mobile gaming. Like once mobile gaming got big, it got big really quick with microtransactions in APAC. As to when you would look at the north and the west, mobile gaming is big, yes, but like when it comes to microtransaction casual gaming, it's been looked completely different from a different level at it. But the reason why it's so big is not because the US picked up casual gaming. That was actually Asia.
Absolutely.
Okay, so I think it's probably time to segue quite nicely into what advice. So really looking at startups who are looking at the market landscape and looking to find that opportunity. What are the top sort of 10 tips or pieces of advice that you would give startup founders who are starting their journey?
Yeah, I would say the one which is as key is starting off with everything is really get moving.
Get moving.
It is. There's always a tendency to hold off, and always a tendency to wait for another day. One of the greatest maxims, action this day. It's like never ever stop doing driving forward. And so I think that's the most important thing is constantly be a source of energy. I always say to the people who I work with that the only real advantage that startups have is speed. Nothing else. We don't have talent. We don't have talent. We never have enough talent. We never have enough capital. But we do have is speed. And so we can get things done faster. We shouldn't have large committees to make decisions. It's only one or two people. And so therefore, as a result, it is maximize that use. Really move at such a pace that the incumbents that basically you can drive forward at a far quicker pace, beat out incumbents, find ways to create new markets, keep on testing your hypothesis. So the constancy is keep moving fast. That's one. Let's think. I said the other one, which I've mentioned in part, was listen to customers. I don't think any company I ever started ever ended up being what I intended it to be in the first place. I mean, there's kind of overall kind of objectives I want to accomplish, and like the whole Lost Einsteins. What do I want to accomplish? I want to help generation and model generations ahead gain access to capital. But it's listening intently to customers, and being ready to pivot, but pivot once you listen to customers. I mean, I do know that Steve Jobs famously, his point was that you don't need to listen to customers. I drive customer activity, and he is an outstanding example of that, where he actually created concepts which people never thought about. And I remember Henry Ford famously said if he'd been told, if he'd listened to customers how to build a car, they told him to build a faster horse. Yeah,
I was waiting for that one. Yeah,
but these are people who are real sort of I suppose brilliant in their foresight. I think for the average plodder like myself, listen to customers. Pivot between as you learn test hypothesis, pivot so to actually find what you actually what they'll buy from you. And so I think that's an important one. I
push you on that one a little
Henry
bit?
Ford or Steve Jobs, but if you're not, listen to customers and pivot.
With respect to listen to your customers, I think a lot of our listeners are going to be thinking, yes, but how? What would you say is the best method of listening to customers? Is it calling them up one by one and speaking to your first 1,000 personally? Is it Hotjar, Mouseflow when you're looking at the website conversions? What should they focus their energy on?
Yeah, so I'll give you an example. So I originally I had this example of idea I had, and I ended up not pursuing it because I listened to customers early. It was so the problem I saw in the marketplace was there are many aid agencies all over the world, particularly in the global south, who need to receive money from the charity donations that come from, let's say, north. And the problem I saw was that most of them are paying way over the odds on exchange fees. And I thought, let's go and create all these neobanks. Let's go create a neobank for the charity sector. A huge opportunity. There are billions of dollars spent by charities. So that was like market research. And then I thought to myself, okay, seems a strong opportunity. Let's now go and talk to the actual charities themselves. So I scheduled about 20 interviews. I spoke to these people, asked if I could create a product which would improve your business, would you want to go for it? And these conversations evolved over time, and I began to realize actually it was a really bad idea because yes, of course, they would want to improve their costs. I mean, it was something would make sense. But if you dug into it, actually, they don't care. I mean, it's unfair to say this, but truly, the people who are the executive directors in charities are in the business to give charity. They're in the business of doing good in parts of it. It's not of interest to them. The back office operations doesn't get their heart to flutter. They don't care to somewhat. I mean, so that and you see that you do all these analysis of like the different cost structures of charities, and you're just stunned like how well this headcount goes in. Anyway, so it's there, but it's not a priority for them. And I also found out that most times the people who are on the boards of these charities, they often have someone from a bank on their board. So I would be like knocking on their door saying, hey, I would like to be your neobank for you in the global south. I can do a better job than any other bank. Oh, by the way, though, your board member is a bank, and then you really don't care. So I realized I could build that business. I could. And I'd probably still be building it today. But it would be a slow, painful journey. And so it was like listening to customers there was like deeply trying to understand like every step of that journey, what would be the various components that would make this successful. So I began to realize it was, yes, there was a need, but the actual onboarding, the customer acquisition would be really, really painful.
Can I ask you one more question on this? Because, and not necessarily on this, but on the fact that you said be ready to pivot. Is there such thing as that you like? Is there a limit to pivoting?
Well, it
you
depends
over pivot.
How much free capital how much capital you have, and time you have. But I mean, there are, yourself, Thomas, in the blockchain space. It is a question of survival. It is, and many industries are like that. Is that can you keep your costs down so that you remain so you can survive and until the opportunity fixed that maybe need market, maybe the regulatory, maybe a customer change of behavior. So if you really believe an idea and you believe the idea is it's on the cusp and you're going to dedicate time to it, well, and you have the support to it, then that is something you may need to listen to the market and pivot accordingly. But I would say, after probably X number of pivots, you probably think like, is this the right fit for me? If I misjudge the market, is it not ready? Maybe it's I'm too early, or the pain point isn't sufficient, or the incumbents are too strong. I mean, so I would say that I'd say number of pivots is dependent upon every circumstances, but it seems to be a case is if you have a strong idea and you believe its time is right, it's not about staying lean and ready to take advantage of when the time does generate, and that may require some pivots in that time frame.
That makes sense. I fully agree, definitely when it comes to blockchain, but I think not only for blockchain, I think any emerging tech industry has that piece where you just, if you think it's right, this applies, right? AI is a very good example at this point too, or LLMs actually.
So what would be your let's say third or fourth point for our listeners?
Yeah, so this is around basically software. So you can solve so much now with these new AI tools, and you're seeing companies basically being built with very, very small teams, and that definitely lowers the barrier to entry. And I learned from the wrong end of this myself. So when we were at Yumi was a company that we were fortunate enough to take public. When we started out, it was a technology company, but a lot of the back office was done in Southeast Asia. And it gave us a tremendous advantage because we could basically have very low cost way to get great engineers, and we built tech. We went public, tested. But the problem was that we became dependent on that structure. And while we had been building out this large team, our competitors, some of them hadn't gone public yet, had built basically an all-data trading platform. And as a result, over time, it became increasingly clear that we couldn't iterate as fast as they could. And that actually became part of our undoing ultimately. And we ended up getting acquired as a publicly traded company by another company. So let's say it was example of take advantage of all these tools out there. You may give yourself a short-term accelerant by using people to do something, but in this world, long-term doesn't make any sense. So I always encourage people to think about new tools. One, the actual newsletters, and if everyone wants to subscribe to it, they can think about this. Is a kind called superhuman.ai. I recommend people look at that one. It's a great daily digest of some of the new productivity tools that are being created, and it's a great way to keep up to date with them.
I'm actually subscribed to them. They have really good content, and you'd be surprised how many new tools come out every day, to various degrees of quality.
Yeah, it's great fun to try them out. I mean, there is, but you do realize that this is this downside of the sheer simplicity of now to create products is just an abundance. And maybe there's a scenario of sheer products that get created, which actually goes back to my earlier point, which is, you really have to think how to find something very competitive and value add, and really so listen to your customers intently to get to that point, because it's so easy in the software industry to build tech.
The two that I'll take away from that is human scale can be a liability at some point. You've got to use that technology, and then superhuman AI keeping on top of what's coming out now.
Mm-hmm. Yeah,
and leveraging that to accelerate the business that you're building. With the perspective of understanding motivations of VCs and looking at the market landscape, if you were going to look at a new market landscape, what would you be doing? What would be the first thing that you'd have to say, okay, this is 100% a good idea or not?
So I think from the point of view of VCs is to understand, their thesis. Every VC, this is, I think, a lot of entrepreneurs, particularly first-time founders, don't understand the full ecosystem. So as a quick explainer, so VCs themselves have their own bosses. They're called limited partners. Limited partners they could be university endowments, they could be institutional large-scale fund managers. So they invest in venture capitalists. Venture capitalists have to, every maybe 4 to 8 years, depending upon the cycle of their fund, or go out and try and secure additional capital from these limited partners to invest. And they're out there pitching themselves, just like you as an entrepreneur are pitching to VCs, these VCs pitch limited partners. And when they're pitching, they have to demonstrate what is uniquely different about their fund. Because just like I just mentioned, all these software companies, there's many of them, there are literally nowadays thousands of VC funds. Particularly, there was a huge bump in VC, new first-time fund managers back in like late 2018 to 2022 or so. So there's a lot of people pitching these limited partners. They all have to come up with their unique thesis. Their thesis is what you as entrepreneurs should understand as to whose thesis matches what I am building, and where is that VC in their fund distribution. So if you talk to a VC and they've spent all their capital, you're just wasting your time. And there are a number of VCs now out there who basically either have chosen to not invest. I think sometimes the valuations are too high or they're too depressed, and they think they can basically wait out longer to try and get even better price. So I think that it's understanding the motivations of that VC, their fund, and where they are in their fund cycle. So that's important to understand. And then the other piece is try and find ways to know and have connections to VCs. The best way to digital VCs is to actually have an introduction. So find someone who knows someone, either one of their portfolio companies or the VC themselves. But either way, try to get a warm introduction into them. So therefore, as you're entering a new market, think about who are the right VCs, who are the right partners, how is the best way to get in touch with them. And then another thing actually as well is I think is to understand the motivations within a VC fund once you've pitched. So let's say you're fortunate enough, you've now got your VC interview, you've had your half an hour long discussion. So you're likely to be speaking to an associate analyst or maybe a principal. It's a decent sized company, or maybe it's a small fund, maybe other managing partner or general partner. And at that stage, they may be talking to many companies like you. They may be just trying to understand the landscape. So they don't think a meeting means you can ready to start cashing the check already. So, and the other thing to think about too is what happens in VC funds. Now, typically, most VC funds every month they have a partner meeting, and when they'll have someone who will then say, "I've got this interesting opportunity, and this is why I think it's." They have to come up with their own thesis and why it maps to the thesis of the fund, and so they present it to the fund, and then there's often a vote or there is some form of decision making where it ends up. There's some interesting analysis done actually on VC fund thinking, like in terms of like, does it should you get a majority or is it a small minority? Sometimes a small minority is more likely to get a confirmed and definitive minority is a better decision from a VC than the majority of the VC fund. I'll explain what you might mean by that. If there is one partner who 100% believes in this deal, as opposed to maybe there's lukewarm interest, but as a majority goes over the line, it's the former is better than the latter. It's conviction is what is a key characteristic of VCs making decisions. They need to have conviction in the fact that your opportunity, your business is going to make enough returns to be able to generate a sort of venture return, which is at a minimum like 3 or 4x the capital they put into you. So it is and it's been proven that conviction-based investing is a stronger format because you can find individual opportunities which may otherwise be lost if you just simply make a decision on majority. So this is some of the insights that happen within VC firms. So think about that. It's not just you, it's like what's happening internally with their VC fund and their decision making, and understand that it may take time. It's not just because they're twiddling their thumbs. They're actually really deeply thinking about how your opportunity compared to many others that could be coming now in the next, because their funds are like 8 years. They have time to like make a decision. They don't need to make investments. They have to think very carefully about, is this opportunity the right time, the right place to invest, and does it fit with my the portfolio we're looking to create here?
Amazing. As a VC, what would you be looking for from a company? So maybe coming at that from a different angle.
Well, with this new fund, Infrastructure Ventures, what we do is we invest. We actually invest. We should take 5% equity in all the companies that we build. They go through a process of identifying these individuals from the Global South. There's a course. It's a 12-week course. The first 4 weeks are all online, and they go through that, and then they pass that. Then they come out to Lisbon, and then they have another 2 months. At that point, we then form a company. So it's like a venture studio rather than a traditional fund. We create a investment in these individuals, and they're part of our portfolio. We do have the opportunity to make follow-on investment, but that normally is dependent upon a signal from an external investor making an investment themselves. So our approach is not to be so selective. Our approach with this is basically to create a venture studio with thousands of companies. It's more a filtering exercise than picking individual winners and having a small 20, 30 portfolio size fund. It's a very different model, because what we're looking to do here with Infrastructure Ventures is kind of lost Einstein concept, is we need to get to a scale which is probably unseen before, because of the sheer opportunity that it affords us in front of us. If we have the Global South, we can't be doing an investment portfolio of 30 companies. If you want to find 0 to 1, our view is it's an untapped market for finding people early on. And we have some interesting tech that we built that can find basically these entrepreneurs way before anyone else does. And we use this tech to go and proactively find them, reach out to them and engage them and say, I see you are about to start a company. I would like to work with you. So it's like we are different than most venture studios or venture funds, is that we actually practically go out and find these companies. We have less inbound, more us proactively finding. That's a slightly different model.
And it's, I think, also in this sense, a bit easier for entrepreneurs because they need less outbound themselves. Like you will be inbound, right? But what kind of skills are you looking for when you're doing this outbound? Like when you look at these entrepreneurs, like how do you match them up with your investment thesis at Infrastructure Ventures?
Yeah, so the key skill that we're looking for is their build activity. So there are a number of databases out there that we are constantly looking at that give us a sense of what people are building, what tech they're building, and then be able to evaluate their tech independently. So we're able to see their history of activity. So we're trying to use public data sets as a way to help make decisions. And actually, this is very similar to the company called Acute IQ I formed about 6 or 7 years ago, the one that we're in AI and fintech. In that company, I created a database of 21 million small business company records, and then ran government data, open government data against it to find signals of a need for a small business need a loan. And so we find, for example, that a small business had a liquor license about to expire, and therefore, because of that, is a good reason for a bank to reach out and ask that person whether they wanted a loan. So think about the same concept now as I'm applying to people in the Global South. There's a very large set of people looking for signals that would suggest that someone is building something, and then there's a signal also that they they're building something which could be interesting and relevant, and relevant to sort of an innovation that we think is it could benefit from access to capital. And so that's what we then use to then reach out to these people, invite them to come for the first 4 weeks, which is again online. And then if they pass sort of a series of tests, which is like tests around their idea, we do peer-based learning and tests as well. So there's a way that we sort of make sure we create individuals who are curious, willing to learn, and if they fulfill upon that, then we then have the chance to bring them out here to Portugal, and we then form a company, and then they do the other two months of activities. We do things like how to price your product, how to create a sales and marketing strategy, how to build your product, how to use AI tools to help build your product. So we're trying to think of constant ways to improve the operations. It really draws upon the playbook I developed, whether it was at Sarah Research Institute or my own companies. I'm more recently working with Finance and Arweek. This is a playbook of how to help companies go from 0 to 1.
It's absolutely fantastic. And I think that, to your last minute, I think it's very important for founders to understand, to know what they don't know. Because in that case, they're easier to supplement with in this case, from your side, you can add faster value to their companies because they already know what they don't know, right? I think that's a very important piece with founders generally.
And then the other thing that we've also found is our programming that we've created. It's all self-directed and peer-based learning. And the reason why that's important is that there's a tendency of most founders to think that their idea is the best thing since sliced bread, and they don't dare share with anyone else in case someone steals it and runs away with their brilliant idea. But in fact, that's a massive fallacy because there are lots of ideas. Ideas are cheap. Well, the hardest thing is execution. It's like timing, market timing, execution. And so therefore, what we've found is that by creating this program where it's peer-based learning, so the idea is that you're in this program, there's a cohort of other people like you. We provide the core pillars of insight and each topic. Let's say it's the sales and marketing, or pricing, like what are the different types of pricing you could use. Then we do a pricing exercise, and then we have a peer-based review exercise. And that's great because then you have other people review your idea, your peers. And then we find the most interesting thing is actually when people review other people's actual company ideas, that's when they learn the most. There's a famous thing like, the best way is to learn is to teach. And so we find that actually being in a position where you're peer-based reviewing someone else's idea and then the merits of their pricing strategy or their go-to-market strategy helps you think more clearly about your own. And so we find it to be a great program. And this program that we use has done so well in other instances. You look at like some of the top tools out there for coders. So there's this thing called 42, which is a group which is now I think pushed through 20 or 30,000 people to coding, and they have found this peer-based review learning has been far more effective than the traditional. I'm in a classroom. Here you go. Listen to me, and then I'll test you, 2 months, 3 months out.
Cool. I'm mindful of time, so I'm going to ask for your know yourself pre-post IPO, your final rule, or couple of rules and advice for startup founders.
Yeah. So this is so it's somewhat like knowing what you'd like to do, and almost what you don't like to do. So I found it easier to know what I wasn't good at. And I think I'm not good at, if you think of the startup, the whole post-IPO world, I really enjoy helping companies at the the startup, the 0 to, I suppose, 3 or 4. 0 to 1 is there I focus on most right now, but I really have found that it's important to know yourself, because if you know what you like to do, then they will help you be even more effective at doing it. It's so it really is fact. It goes back to the idea about earlier on about the pivoting. If you really believe an idea and you think that this is, you just can't stop thinking about it. You wake up in the middle of the night, think about the idea, then do that. Know yourself. Do that. Don't waste. Don't listen and be persuaded to forego following your I suppose your dream or your. You don't have regrets. Don't have regrets. Like often people ask me about their idea, and I say, this is my opinion, but just go for it. It is. There's no reason why you should not go out. If you've got an idea that just is just bubbling inside you, do it. And if it doesn't work out, do another one or find something else to. But at least try and find a way to actually go and build a startup if that's what you want to do. So know yourself and be able to and as I say, action is day. If you want to do something, go and do it now. Don't wait. Don't procrastinate.
I've heard the same thing as like builder, sustainer, and evolver, right? Like know what you are in order to put yourself in the best role. If you're a builder, that's great, but if you hit V1 or post IPO, you might not want to be in that role anymore because different things are being asked from that role that maybe a year ago was very good for you, but a year later might not be because of the company circumstances that change.
Yeah,
for the good or for the bad.
Yeah, post IPO, there's a much more process driven, and there's it's harder to at that point pivots have a significant impact.
Yeah. Well, now it depends on something.
So pushing on to the research topics of the brainstorms, there's one piece we've covered in depth already, but I think it's worth sort of summarizing in terms of bridging the gaps for lost Einsteins and your current work with infrastructure ventures, especially I know we've talked about how you identify these technical founders in the global south. What is the unique market opportunity? And whilst we know the challenges sort of identifying them, what do you think the main aim here is to sort of drive the innovation and the economic growth and how this is going to sort of maybe even change the game?
Yeah, I mean, my intention with infrastructure ventures is to build really the biggest incubator out in terms of driving this, solving this problem around the global south, this mismatch between talent and capital. And obviously there's a danger that you build a large number of companies, and that there's an issue. There's a signal to noise ratio. So the key is you have to be able to identify early on. That's why our training processes are so important. Finding the people with the right mindset, the curious mindset, that are having an idea and the right mindset. And so for us, it's finding that the right entrepreneurs, and they bring through this program of training so they give them the best chance. But the key thing is we're not looking to bring them to Portugal to remain in Portugal. Our objective is to send them, go back and build in your own country, but now have the training, the knowledge, the resources that you can build in your own country. I know mentioning earlier on, Charlie, about the challenges you're facing in Indonesia. Some people faced in Indonesia. So if you could have a chance to be trained up and then go back. And what we do is we create for these founders who come to our program an EU-based company. So therefore they have a vehicle that they can then use to raise capital. Because so many times that we came across people who, and we also provide them a bank account too, that as well. We get them a bank account and a company based out here. And the reason why that's important is that, you hear individuals, let's say in Pakistan, who can't get an account on Shopify. Why? Well, because they don't have a bank account. They don't have a recognized bank account, or they don't have, or investors don't have confidence in the corporate structure of a Brazil-based company, or one in anywhere where there's not considered their similar standard of governance. And so therefore, we are trying to find a way. Our big objective is to bring great talent, nurture it, and then sit back to build amazing companies in the global south.
It's brilliant. I mean, one of the things that I found fascinating and wanted to talk to you about actually was, how do you navigate that? So obviously you did quite a bit of work on the bio and sort of researching you going into this conversation, from fintech to marketing tech to cybersecurity to telco to blockchain. It's quite a story arc, frankly, in terms of specialization. So when you, or specificity in the sector that you're working in, when you're going into a business, and this is really for our viewers, is something to really dig into, and even for people that might be interested in infrastructure ventures, is what is the process you go through of identifying a space in emerging technology? What is the what goes through your head?
Well, I think it first of all starts on what are the macro trends, and in that, from that perspective, where is the market need, the customer need, and then behind that will then likely follow the capital to support that. So that's the macro view, and then diving into the specifics. It's like understanding what are the dynamics of the market you're going into. Who are the leading companies? What amount of capital is available, and what is the experience of companies deploying capital, and then to start talking to people. So I gave you the example earlier on about the neobank for the charity sector. I was talking to 20 people. I mean, by the time if I continue that, I should have talked about 50 people. I try and talk to about 20 to 50 people. And the advantage that I find of this approach is that once I start talking to individuals, I start to get their opinion. I then almost co-opt them into helping me out, because I then say, no, I've listened to what you say and I've learned further about this. Can you now be my alpha or beta customer? And so because you've brought them on the journey, you're more likely then to transition those 20 or 30 people you've spoken to, if they represent little customers, into then potential customers. And now you have someone who feels this is part of them. A similar example of this is on the venture side, is that one of the maxims I often heard is, if you want to basically raise money, ask for advice. If you want to get advice, ask for money. So is that you learn from customers and ask them for their advice, and you may actually get customers at the back end of it. And then that's like listening to people and having a hypothesis concept, which is this sort of scientific method, which is like try and, as much as you can, divorce yourself from the idea. Yes, you're incredibly passionate about it. You wouldn't be doing it otherwise, but try to find a way that you'll want to remove from it. Like, this is my idea, and I want to improve upon this idea. It's a hypothesis. Let's test it. And you start talking to people and say, hey, Thomas, I got a hypothesis. I love on the market. I'd love to share that with you, and I get your feedback. And so then you begin to frame it as that kind of scientific method. And then ideally, you're less likely to be captured by the momentum that can sometimes come if you just follow what you believe. And that's even more the case in technical first-time founders, who often have basically a technical hammer and constantly looking for nails to hammer it in. But actually, you as much as you can, like try to treat it as an experiment that needs to be validated.
No, I think that's brilliant. When you're looking at these investments, and really it's kind of all investment, because one's an investment of time and the other is your capital. When you're looking for signals and trends from both sides of that table, what would indicate to you, or through your experience, what has indicated to you a ripe opportunity to say, okay, I am going to work in this industry right now, or something that our viewers or potential students and cohorts of infrastructure ventures can go, well, Ian said this is the right way to go about looking for that opportunity. This could give me the best chance of getting in touch.
Yeah, I'd say that the one of the strongest signals that I found to be helpful to break into a market is if there's some regulatory change that is coming down the pipeline, and where someone else or some change that requires customers to think differently, and pushes up this as an issue they may not have thought about beforehand, because there's such a he would never quite appreciate how hard it is to get people to change. They often say, your product needs to be like 10x improvement on the incumbent to have a chance of basically taking a customer taking an interest in you, because the switching costs are so high. Because think about it from the point of view of the customer. Again, put yourself in the customer shoe. There you are. You're talking to like the VP, if you're lucky, of this line manager. He has to if it's a significant cost to the business, he has to get a lot of people in his organization to agree that this is a problem, and agree the problem as it is right now. And then he has to get budget for it. Blueberry has not a budget for it already. And then other priorities may come up, and depending on the market, then maybe there's a round of cuts. And there's so much that could go wrong. But if you identify a change that is required in the marketplace, then this is something that you can align yourself with, and it's much easier to wedge yourself into discussions through that.
So there's a question here. You don't have to answer if you don't want to, but again, this is all towards sort of driving our readers towards actually looking at a market before running head first into an opportunity that, as you say, is just really exciting. How do you predict the next big wave in technology?
Is it that famous glass ball you've been telling us about off screen, or?
There is. I suppose the one piece I'll share with you, which is a reason why I'm interested in the blockchain space, and I suppose it's a reflection of the fact that I started off in the telecoms space where I began. Is that, as I mentioned, some people have got into the blockchain world because they read the white paper and have got clamped on to that, or a friend of theirs is buying crypto and told her to do so as well. But my story is far more prosaic. My story was that I saw the evolution of the technology. I said to myself, listen, there is the on-premises sort of storage, and basically the idea of all your technology is in the office. There's remember the old days, you had a server below the desk. That's on premise. And then with Amazon in 2005 onwards, or 2006 onwards, Amazon created cloud-based computing. At the time, everyone said, "Why would I put my secure data in the cloud?" I mean, it was unbelievable, because it would say I want to be able to take my auditors down to the basement and show them that is where the data is stored. Why would I want to put it up in some random cloud? Everyone could look at it. And it took actually I think the Pentagon and then Johnson & Johnson, a few other companies chose to work with Amazon. And suddenly the market changed. And then everyone thinks it's quite normal to put your content in the cloud. And so the next evolution, to me, naturally is decentralized cloud computing, because it's cheaper. And you can look at it because you can see the trends happening today at the top of the stack. The stack being like, we think of like the stack being like the application level layer, the middleware, the hardware, etc., and then all the way down the chip. So think of the top of the stack right now is it's commonplace. Everyone thinks about decentralized applications. What is Uber? It's a decentralized application. Means you don't need to have a taxi company to buy a taxi service. What's Airbnb? It's you don't need to have hotels to offer, basically guests to stay in different hotels. So the idea being is that if that's the application level layer, it's bound to come down into the lower part of the stack. And that's the trend that I saw. That's why I got into blockchain, was because I saw ultimately that is going down. Blockchain is the sort of middleware, and then the protocol, and then basically the layer of tech is a natural. Blockchain will be the next step after Amazon centralized to be decentralized. We'll still have some people who want it centralized, but the evolution of tech will go to decentralized cloud computing.
But it does require some experience in the tech market, or I think generally experience in the industries that you worked in, and maybe some skeptical views as well, in order to say, well, it actually makes sense to go this direction. I remember when I worked for an agency and we did supply chain software, and at some point, I started doing blockchain. We're talking 2017. And then we started to do another supply chain project, and I realized, why are we doing this? And this was 2017, so the blockchain tech was not that far. Was pretty far away from what it is right now. I was realizing why are we not doing these supply chain things on blockchain? Because blockchain is like the perfect layer for supply chains. But in order to see that, I've been then already working 10 years in tech, right? So I've been doing supply chain and SaaS and all these other things that I could then understand, hey, there is actually an opportunity to do this on blockchain. But if you need to have some point of call it like an intro or a perspective on the market, and in order to actually come to those views, right?
To an extent, I would say that yes, it's helpful. I mean, the one I earlier on provided the recommendation that people subscribe to the superhuman.ai newsletter. If people have the chance, I'd recommend a podcast. It's called Founders. The Founders podcast is really interesting. It takes this individual who basically reads hundreds of biographies and collates them around key individuals and shows how these individuals have many similar traits. And it's a great learning experience to understand what are some of the common characteristics that make successful entrepreneurs. So yes, Thomas, I think knowing that having someone selling in the marketplace is helpful. But you raise some of these stories, and generally, actually, if you think about what biographies are, business biographies are an untapped gem, in my view, is because what a business biography is it's 50 or so years of someone, or not longer, in a business where they've been successful, distilling their ideas into 200 pages for you to read. It's stunning. What is the best way to learn about innovation? And because human nature is repetitive, we're not reinventing we're not doing anything necessarily new here. It's all pretty much the same. Humans have the similar interest to build, innovate, etc. for millennia. But what is interesting is what are the approaches these people have taken? And so I think it is understanding the market is very helpful, but I'm looking for traits and insights in as much as we as the individual is equally important, and you can do that by reading some of the stories of the past, almost like befriend the long dead sort of business heroes, I suppose.
Yeah.
We've talked, and I've pushed a little bit. I'm mindful of how you look at a market and how you sort of judge a market landscape and what you personally do. The one piece that I think is just missing from that equation is this last bit, which is, how do you know you've actually stumbled across something? What are the criteria? I mean, obviously someone buying something from you and VC giving you money, but there's a spectrum in there where you can see, okay, this many people are willing to buy. Where does that line sit for you?
It depends tremendously on each and every company but I'd say that in general, you have this sense of if you're sitting on a company which is taking off, you know it.
Right.
You know it. It's there. You have problems like hiring, or maybe less so with AI. But you certainly have. It's when you got true product market fit, and now, as I think Mark Andreessen famously said, product market fit is you really know that you've got it. It's very apparent when you're there. It's a tough road to get there, and there's a lot of challenges on that journey. But once you get it, you walk into a customer and you don't need to explain. They get it. They said this is a problem, and if the pricing is right, then we're ready to move forward. And it's a very different experience than what everyone else is used to, which is waiting on or trying to get a meeting and then trying to get budget and things like that. But if you found a problem, and it is a big enough problem, it's very apparent.
Okay, I mean, in the general criterion, say, so right at the beginning of that spectrum, when you're sort of thinking about the success of an idea, and you may have had some indicators, do you think about things such as sort of market demands, the competition in the space, how scalable the solution is, anything like that?
Yeah, I think it's important to, right from the get-go, to plan for victory, and therefore, as a result, is to create a company which is designed to scale, and make sure that it's important to determine what is your kernel of value. When I gave the example earlier on about the company Rhythm, where we realized our core value wasn't doing the whole thing, it was finding a specific part where we could focus on. So if you early on in your idea can identify what your kernel value, like your proof of concept, and you show that to the customers, if you can identify that is, and then I suppose outsource everything else, or find cheap performance or anything else, just focus on that kernel of value. That is itself is step one, is that you've found something that people want, and you to focus on that, and then and build around that core starting block.
It's like, I want to add, like, Charlie, you and I had this conversation, I think half a year ago, for a particular product. I remember that, where we know there's market demand, we see it all around us, and then we actually started to push it towards potential buyers, and we found that we're actually too early. Like, we found that and to the point where we were like, okay, well, you know what? Like, we're gonna leave this for now. We know it's a good product, but we're gonna leave this for now because it's too early. But the market, the competition, and from a scalable perspective, it all said yes. It just we couldn't validate it with the customers because the customers didn't see the value for it. Where I think the rest of our industry did see the value for it, but not at this moment in time.
Right.
That's just being too early. I think this is the last piece on that. On this, which Thomas, you've kind of nicely segued into, is how unique does your value proposition have to be? Should you be? Does it have to be completely brand new? Because I see you've done sort of both: brand new, faster, smarter, cheaper. Which makes more sense, or which was easier in your experience?
Well, I think that it's the value proposition has to be sufficient that it gets a buyer to want to change from either their current incumbent or to buy a new service, and it's down to their own cost economics. And so one of the approaches that I have found to be particularly successful is you create sounds very basic, but you create a spreadsheet and you outline what it is that you're doing and how it can add substantial value to what they're currently doing. This obviously is a B2B. It's not just B2C, but B2B, so into enterprise. If you can demonstrate that you can provide a 8 or 10x improvement on their current business, and you provide, create a spreadsheet, have them work with you, fill it out, then you've given your champion in that organization a strong tool to demonstrate your value proposition, because it's they have contributed to it, it's their figures, and they can see how this will make a difference. So that's on a B2B in terms of like, how do you create a compelling value? You actually need to work with the customer to illustrate how that your product can make a difference. On a B2C scale, it's a bit harder because, but I suppose you can, the way to do it there is to test on a subset of users and determine if there's some standard metrics around SaaS-based product, like the churn rate and an uptake and lifetime value and things like customer acquisition costs, things like that. Those are some of the metrics that are well understood in the marketplace that you can use to validate whether you're on the right track, and you have a sufficient unique value proposition that the customers keep on coming back and buying.
All right, so we're now on to the final segment of the show. And this is where we ask Ian, if you didn't have the bags, the big bank accounts, if you didn't have the reputation, or the phone book, the black book that you have of all the people that you've worked with that know and love you, but you were starting again with a knowledge in your head, what would be the top 5 personal startup desert island essentials that you would bring with you if you're going to start your journey back again?
I suppose if it's an idea that I'm really excited about, I'd like really to find a great co-founder. The many companies start off as a solo founder with an idea. If you're a technical founder, it's a lot easier because technical founders can stretch to building the business themselves. If you're like a non-technical founder, it's a bit harder to do. I am by my background not a technical person. Key for me is to find a strong technical founder, co-founder of this, and so that would be important for me. But everyone's know yourself again. If you know what you're good at, and in my case, I know I'm not good at tech. So in terms of like building code, so I need to find someone who is excellent at building code, and the sheer perseverance around that. There's a friend of mine called Chris Barton. He was a founder of Shazam, and he was saying, he described to me when he spent literally months talking to the very, very best people in the whole area of technology around audio technology, and found this absolute stunning guy, Avery Chan, and basically Avery and him work on another sort of co-founders. And that's an example of like taking the time to find the best co-founder to build a great company.
Okay, number 1, good. Find a good co-founder. Number 2.
Well, this is now down to yourself. Is have the right mindset, sort of a constant element of being curious and learning. Like the idea is that you should always be hungry to keep learning from others, and try not to, as much as you're passionate about your idea, not to personalize it. So you take it in a way which is you get too caught up in it. You got to try and think about it as independent activity that needs to be looked at rationally and thought of as almost like, as I said earlier on, a sort of scientific method, like a experiment, a hypothesis needs to be tested. And so having the right mindset is absolutely critical to ensure that you have the best chance of success. You don't get carried away with an idea, and you take a rigorous step-by-step approach to evaluating it, so you can get the best chance for customers to buy the product. Yeah.
Number 3.
Probably perseverance. I mentioned that if you can, it's rare that you launch a product with the right first time, get a good market approach and the right the customers set and the right product. So if you can have the ability to prepare yourself for a long journey, it is a journey of both highs and extreme lows. But it is, if this is what you want to do, and again, you have to be passionate, you have to really believe in this. It's so often, the whole startup thing is somewhat viewed as an amazing experience. Well, it is, but it's challenging. And you have to, I often say that you have to put your family to be understanding what you're going to go through. It can be hard, in terms of not, it doesn't always work out. And so you have to be able to get yourself mentally prepared for a long journey. And I always feel as part of that is to be as much as mentally fit as physically fit. So being like keeping yourself active. There's a lot of burnout. You hear about people talking a lot about mental health issues around being a startup entrepreneur. So try to find a way to break away and think. I mean, you hear about someone like Warren Buffett, who is a brilliant investor. He spends a large part of his day just thinking, reading, thinking about interesting business ideas, and knowing when the right business appears in front of him, he's ready to make an immediate decision. He's ready to put like hundreds of millions of dollars down because he spent the time to really understand the market. So don't try to fill up every hour of every second of your day just because it makes you feel busy. Trying to really sort of have the ability to think. So there's a lot to that in terms of just the right mindset, and then having the structure and the perseverance.
Absolutely. I felt there was something one of my old mentors, one of my old CEOs used to say, which was a startup journey on average is about 7 to 10 years. And having that mentality in your head as you go into it puts you ahead of most of the game.
Yeah.
Knowing that it's going to be long means that your expectations, the mother of all sadness and misery, are set correctly. And, if you've got a 3-year timeline, a 2-month setback is much more emotionally charged than if you think you've got a 7 to 10 year.
Yeah, it's so true. Things take a lot longer. It's a lot longer than we all expect. And everyone creates their spreadsheet around revenue growth, and they all have this hockey stick, and it's all like funny enough, all within 5 years. Or 3 years if you decide not to do a 5-year projection. All of them have this takeoff after end of year 1, year 2, when
they've got the only fools and horses adage when they're doing their commercial plans. And this time next year, Rodney, we'll both be millionaires, kind of thing. I think we've all, Thomas and myself, have also seen commercial plans or projections that, and you're like, why? And the answer is because it feels good.
or how, right? Well.
Sorry, so on to your third. What would be your third desert island item?
Fourth, actually.
Yeah.
Forgive me, fourth.
Maybe having a Kindle. Now, that is because it can give you access to hundreds of books for you to read on your desert island, if that's where you are. Obviously, the power source as well. But having a Kindle is having access to other people's experience and knowledge, and just keep on trying to keep up to date with trends. Try to assume that you don't know all the answers at all, and the fact that you need to keep on learning. And a Kindle is a fantastic, easy solution to do that. And then I think about Kindles is I think you can take them in the glare of the sunlight on the desert island beach. You were able to see it a little clearer than you've really took a tablet or something like that.
You seem to have experience with that.
maybe beaches, I imagine. The fifth.
Yeah, this is somewhat similar. There's so many great tools out there. There's podcasts. I mentioned the one, the Founders Podcast. There's attending events. I mean, I even the same. I'm constantly going to meetups. In the evening about new topics, new businesses. To try and learn about things that I'm completely have no knowledge about. But it's I think the most. You see it actually in academia right now. The most interesting areas in academia right now aren't in the sort of vertical sort of faculties. It's actually the crossover. It's like chemistry and physics, or psychology and sort of chemistry or something like that. It's fascinating, these the crossover points in different in different parts of study, and that's what you don't get if you just simply focus on just your industry. So like learning from other industries, trying to think about things in an orthogonal way, which is and that means getting out there. That means maybe not catching up on the latest Netflix episode for that particular night, going out for a meetup on something which is very different. Could be also on quantum computing, which is that seems to be on the cusp of our next hype cycle. Yeah.
Well, that's brilliant. I can only thank you for your time, Ian, and spending the time with us. Where can our audience find you, connect with you, or even apply to Infrastructure Ventures?
Yeah, so with Infrastructure Ventures, we're out there proactively finding people. So we don't really have, it's more, you will come, we use our data tool to find people, but you always go to, we do take some who come over the transom as such, and that is at infrastructure.ventures. That's the site there. I myself will be reached on LinkedIn. That's probably the best way to reach me. Also, those are probably the best ways. I'm constantly kept up with those two.
Well, thank you for your time today, and have a good rest of your day in your meetings. You've got to go.
Thanks so much. All right. Bye.
Thank you. Goodbye.